make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
Your freedom.
the Peter Schiff Show.
Today's podcast is sponsored by NetSuite, the easy-to-use cloud-based business management software for every aspect of your business. Download the CFO's Guide to AI and Machine Learning at netsuite.com/gold. The guide is free to you at netsuite.com/gold.
The Peter Schiff Show.
Well, as expected, earlier today, the Federal Reserve left interest rates unchanged. The Fed funds target remains between 4.25 and 4.5%. You know, I think this was one of the most hawkish press conferences that I've seen Powell participate in. You wouldn't really know that by the reaction in the stock market. The stock market kind of, just ignored what Powell said. The bond market did get a boost, as you would expect. The dollar got a boost and gold sold off a bit. So those reactions make sense from a hawkish Fed. But you would have, expected the stock market to sell off. And I think the reason it didn't is because I think a lot of investors are hopeful that there's going to be some positive news coming out of Switzerland over the weekend, where the U.S. and China are supposedly going to be having some trade talks. The market got a quick boost from that when it was announced yesterday in the after-hour session, and has kind of held on to that rally. But I think that leaves the market poised for a disappointment when nothing really happens as a result of these impromptu talks with China. And I think there could be a delayed reaction to this press conference. So I'm going to get into that in a minute. Interestingly enough, President Trump didn't say anything. He didn't immediately come out bashing, Powell, the loser, too late. I mean, he bit his tongue and said nothing. So maybe, he's learned a lesson and he's going to keep quiet. And to the extent that he's going to say something to Powell, maybe he's going to do it behind the scenes. Where, he has a better chance of being effective, and it, kind of backfires when he does it publicly. So he's kept his mouth shut, at least, so far. Who knows? He might post something on Truth Social later on today or tomorrow, but seems like he's staying out of it. But anyway, let's get to the Fed. First of all, in the prepared remarks, one of the, interesting comments, or more lie than comment, is that Powell said that inflation expectations remain well anchored, and the Fed's job is to make sure they stay that way. Now, I don't know what world Powell is living in, kind of like the Baghdad Bob world from the Gulf War, because inflation expectations left the 2% anchor a long time ago. I mean, hasn't Powell been paying attention to any of the Michigan numbers that have been coming out on inflation expectations that show, I think, 1-year expectations with a 6 handle and 5-year expectations have got at least a 4 handle. So we're nowhere near 2%. So for the Fed to claim that, it's kept inflation expectations anchored at 2%, it's just ignoring the obvious, right? The Fed has failed if that is its mission. The other thing that Powell said, and he kept reiterating this throughout the press conference, is that we're in great shape. You know, the economy's in great shape. He said inflation's in great shape. He said, employment's in great shape. The economy's in great shape. Everything's in great shape, right? Well, the interesting thing is, in their official statement that it's written, and they put that out, right? One of the lines they added that was not there the last time is that the Fed added that the risks to higher inflation and higher unemployment have risen. So it's not either or, it's both. So the Fed is correctly, right, it finally got something right, although it's not even a risk. As far as I'm concerned, it's a foregone conclusion. But the Fed said that the risk is that we have higher inflation and we have higher unemployment. Now, given that, how is Powell describing the economy as being in a great place? How is he saying that inflation is in a great place? How is he saying that the labor market is in a great place? Doesn't sound like a great place to me. I mean, a great place would be that the odds of higher inflation are going down, right? That sounds like a great place, not where the odds are going up or the odds of higher unemployment are diminishing, right? That would be a good place. But when you're admitting that the odds that of higher inflation are going up, that's pretty far from a great place, especially when both of them, the Fed didn't say the risk of higher inflation is going up, but we feel okay about employment, or the risk of unemployment going up, but we're not worried about inflation. No, the Fed admitted that the risks are rising for both simultaneously. So in other words, the risks of stagflation, because unemployment is going to rise because of a weak economy. And either the increase in unemployment causes the recession, or the recession is caused by the rise in unemployment. But either way, Powell is describing elevated stagflation risks. That sounds like the farthest thing from a great place, especially since the Fed really doesn't have a plan for stagflation, although now it claims that it has a plan, right? The plan that it has now is to figure out which one of its mandates is farther away from where it's supposed to be and then focus on that one. But I don't even know how they do that. I mean, how do you tell? Let's say unemployment goes up to 6% and, where it is now in the 4s. But if inflation goes up to 4 or 5, I mean, which mandate are they farther away from? I mean, it seems like they're about the same. I don't know how you know which problem is worse, the inflation problem or the unemployment problem. I mean, they may be equally as bad. So I don't think the Fed's plan is going to work, especially, and Powell had to reluctantly acknowledge this, but whichever mandate it chooses to focus on, right? So if the Fed decides unemployment is the bigger problem than inflation, even though inflation is a problem, if they try to solve the unemployment problem by cutting rates or doing QE, they make an already bad inflation problem worse. And what if making the inflation problem worse actually undermines the economy and causes unemployment to go up, even though that's the mandate they're pursuing? Conversely, right, if they end up saying inflation is the bigger problem than unemployment, and they jack up interest rates to fight inflation, well, now unemployment goes up, and now that might be the bigger problem. So what do? Just back and forth? Every time they fight one problem, they make the other problem worse, and then they have to turn their attention to the problem they just worsened and then make the other one worse again, right? There is no way out of it when you're in this situation, because none of this has ever worked, because the Fed was always able to get away with creating inflation to solve problems, or to pretend to solve problems. It was really just sweeping them under a rug. But it's not going to be able to get away with it anymore. I believe that, the Fed is going to ultimately decide that it's the labor market and the economy that need help. Inflation be damned. But it's going to backfire, right? It's going to weaken the economy further and create even more unemployment as the inflation rate is rising. So it's a no-win situation that's coming up. I mean, it really, if you read between the lines of what Powell was saying, especially in the Q&A, he really was saying, we're screwed, right? Because he knows that the economy is weakening. That's why he's saying the risks to unemployment have risen, but he's not cutting rates. Why is he not cutting rates? Because the risks of inflation are going up. So he's in a bad position. He's telling us that. And the fact of the matter is, the Fed should be hiking rates. That's what $3,400 gold is telling you. That's what this massive credit expansion is telling you. But the Fed won't raise rates, because if they raise rates, they'll cause a financial crisis. So they can't cut rates, right? They can't raise them, so they're leaving them the same, just like a deer in a headlight. But that strategy is not going to work, right? They're too scared to do anything because they can't do anything, so they're trapped. And so if you read between the lines, you'll realize how screwed we are. But unfortunately, or fortunately, depending on your perspective, most people who watch the Fed have no idea what to watch for. They don't understand economics themselves. That they got no clue, right? It's really the blind leading the blind at these press conferences. But so apart from that BS, let me get to some of the points in the Q&A that came up. So one of them I thought was interesting. He was asked, I think the first question, by Steve Leisman of CNBC was, well, of the two mandates, employment and inflation, which do you expect that you're going to have to rescue first, right? What do you think you're going to have to do first? Help the economy out, help out the labor market, or fight higher inflation? And the Fed's answer was, I don't know. I got no idea. Right? We're clueless. So in other words, the Federal Reserve, with all their information, they're admitting that they got no idea. That as far as they're concerned, the odds are even that they could have an inflation problem on their hands or an unemployment problem. They have no idea. They don't even know which one we're closer to than the other. So doesn't that tell you that they have no idea? If he's being honest, he's got no idea what's going to happen, right? How could you not even have a feeling? And I think maybe the Fed has an idea, but he doesn't want to let the cat out of the bag. He doesn't want to risk a reaction in the markets by tipping his hand and by saying, well, we think it's more likely that we're going to have to save the economy. He doesn't want to say that. On the other hand, he doesn't want to say, well, we think it's more likely we're going to have to fight inflation, because that means hiking rates. And nobody even wants to entertain the possibility of that. So he just has to act like we had no idea. And because we have no idea, we're doing nothing, right? Does that sound like a good policy? It's because we don't know what's going to happen. We have no idea. By default, we're just going to do nothing, even though doing nothing is probably the wrong thing, right? Because one of those things is going to happen. So either way, you've guaranteed that you've made a mistake, right? Because either you missed the opportunity to preemptively fight inflation, or you missed the opportunity to preemptively fight unemployment. So what you're saying is, look, we don't know what's going to happen, so we have to stand pat and react after the fact. So if it turns out we have a huge inflation problem, well, we'll try to put that fire out too late. And if it turns out that we have a recession, a lot of unemployment, well, we're gonna be too late on that too, which I guess would make Trump right about calling him Mr. Too Late, because he's basically admitting that whatever happens, they're going to be too late. And also, there was another question about rate cuts, or how many cuts, or what would happen, do you think, for cutting rates? And he basically said, well, I don't know. Like, I mean, Powell basically admitted that he has no idea if the Fed's going to cut rates at all this year. Now, the markets are pricing in 2 or 3 rate cuts. So apparently, the markets believe they know something that Powell claims he knows nothing about himself. Powell said that as of now, the Federal Reserve has no idea if they're going to cut rates at all in 2025, let alone how many cuts or when they're going to start cutting. He has no idea. He says, well, we're data dependent. The data can go either way. We don't know. We're just sitting back and waiting for, a safe to fall on our head to tell us what to do, because we don't know. So how are the markets so sure that we're going to get all these rate cuts when the Fed is saying we have no idea if we're going to cut rates? So that's why I'm saying this is a very hawkish statement where Powell is throwing a lot of cold water on these rate cut expectations. I'm actually surprised that gold didn't sell off more than it did. It was down about $70 on the day, but it was already down about $40 or $50 before the press conference. So it wasn't that big a sell-off. And, gold was at 34.30 yesterday. In fact, GLD yesterday closed, I think, 2 or 3 cents below its record high close from a couple of weeks ago. So for all intent and purpose, it was at a record high yesterday. And, so it didn't really come down that much, given how hawkish I believe the Fed was. And the dollar rallied, but, it wasn't that big a rally given this. So I don't know if it really shows how weak the dollar is and how strong gold is that, both markets shrugged off this hawkish Fed, or maybe the markets, haven't really connected the dots to what Powell just said. Maybe it's going to take a day to set in, and then we're going to start to see a bigger reaction. The final thing that Powell said that I thought was really ridiculous at the press conference, and really shows you, maybe he is that clueless when it comes to, basic economics. And I've always thought, like, in order to get a job at the Federal Reserve, you got to flunk a test in basic economics, right? Only the people that fail the test, right, get to work at the Fed. If you pass the test, they won't even consider you. Anyway, actually, we're going to take a quick commercial break. I'm going to get to this final point, and then move on. I have a lot to discuss on the podcast, but I'm going to get to this final point from the press conference at the other side of this break. So stick around.
As a business owner, I know the challenge of navigating unpredictable markets, interest rates, and inflation. That's why having the right tools are essential. NetSuite streamlines operations and scales with growth. Over 40,000 businesses have already future-proofed their businesses with NetSuite by Oracle, the #1 cloud ERP. NetSuite brings accounting, financial management, inventory, and HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data. When you're closing the books in days, not weeks, you're spending less time looking backwards and more time on what's next. Whether your company is earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. NetSuite is the platform that I would choose, and you should too. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/gold. The guide is free to you at netsuite.com/gold. That's netsuite.com/gold.
All right, so I'm talking about the press conference with Jerome Powell. So a question he got had to do with, isn't he concerned about supply shortages coming from the tariffs? Because, all the ships that normally bring Chinese goods to port, they're not showing up, or they're showing up half empty. And so there's not going to be enough goods, right? It's another COVID-style supply shock. Only this time it's not the pandemic. It's the tariffs. And he said, well, he's not really thinking about that, or, he doesn't seem to think that it's material. And I think the reporter said, well, would you do anything? Like, how would you respond to this, right? And Powell's answer was, well, it's beyond our mandate, because he said our policy tools only affect demand. He said we can't do anything about supply. And so, that's going to be up to the Congress to get involved. We just have no role. And of course, he's completely wrong. Maybe Powell doesn't understand supply and demand, again, which proves that he flunked the test on economics in order to get the job at the Fed. Because he absolutely can have an impact on supply, because supply and demand work together. So if there is a supply shortage, what Powell's job is to address that from the demand side. So if supply goes down, the Fed needs demand to go down, right? That way the market stays in an equilibrium, right? So if there's less supply, okay, well, let's have less demand. Powell absolutely can address that. So what would be the appropriate response if all of a sudden there were a lot less goods for consumers to buy? Well, Powell needs to tighten up on the money supply, raise interest rates to reduce demand so that demand comes down along with supply. That's what he should do. But of course, he's never going to do that. He's not going to hike rates. He's not going to reduce demand. That crashed the economy. But that's really what the Fed's supposed to do. In fact, I mentioned this on the podcast. When the Federal Reserve was first created in 1913, that was precisely what it was supposed to do. It was supposed to have an elastic money supply that expanded and contracted along with the economy. So if the economy was booming and there was excess supply, the Fed was supposed to allow money supply to grow. But if the economy was contracting, if supply was going down, the Fed was supposed to suck that liquidity out so that money supply came down with the supply of goods. So to keep the two, in harmony. So Powell absolutely has the ability to react to changes in supply by changing demand and then changing where the supply and demand curves intersect. So he doesn't even understand how monetary policy works or how supply and demand, right? This is the most basic laws of economics, the interplay between supply and demand and how one affects the other. Anyway, let me move on from Powell. Although before I do, I wanted to talk again about the reaction, because gold was up $100 an ounce yesterday after being up $90 an ounce on Monday. So you had a $190 two-day move, and now we had a $70 pullback today. But the trend is clearly up, and I think what sparked the pullback was the optimism about trade talks with China. But also, not just in the foreign exchange market, over the last week, you had a two-day 9% surge in the Taiwan yuan. I mean, that is rare to see that currency move that dramatically. Now, it pulled back about 3% the third day, but still it held on to a 6% gain very quickly. And again, this is another sign of the dollar breaking down. And the dollar has, much further to fall. But I don't have a lot of optimism for these China trade talks. And in fact, what I think the Chinese may finally be doing is the right thing. They've been resisting doing the right thing for a long time because, there's always some short-term pain. Because the biggest mistake that China made, and I've been talking about this for decades now, the biggest mistake the Chinese government made was hitching its cart to our wagon, right? They tried to service the U.S. consumer, right? Supply the U.S. consumer with goods without recognizing that the U.S. consumer was broke and really couldn't afford to pay for the goods. But China continued to really subsidize exports to the United States. They did that by artificially suppressing the value of their currency so that Americans would have more purchasing power and their own citizens would have less. And to keep our interest rates low and to enable these trade deficits, they accumulated trillions of dollars worth of mortgage-backed securities and treasuries. And by keeping their own interest rates artificially low to prop up the dollar, because higher interest rates would have sucked money into their own currency. So by artificially keeping their interest rates low to keep our economy propped up so they could keep selling us stuff that we can't afford. They caused a lot of malinvestments in their own economy, right? A lot of misallocations of resources in the Chinese economy. And doing the right thing, weaning themselves off vendor financing the United States, always had some short-term negative consequences. Of course, tremendous long-term benefits, but governments, even I guess those that aren't democratically elected, are very cognizant to, the popularity in the short run. They want to keep the people content. They don't want to, upset the apple carts. And so China's kind of, continued this. And the longer they've continued it, the worse the problem has got, because now they have more and more dollars and more treasuries, and they've caused the imbalances in their own economy to get bigger and bigger. But we finally might have given them the kick in the ass that they needed with these Trump tariffs, because now China sees what a big mistake they made in allowing their economy to become dependent on a bankrupt customer. I was watching Kudlow today on CNBC, and he was talking about how we're China's greatest customer. And there was this congressman on there saying that, the most powerful force in the world is the U.S. consumer. I mean, all of this nonsense about the U.S. consumer and how we're this great customer. We're China's worst customer. Your best customer pays. China's best customers are the ones that it has a balanced trading relationship with. The fact that it has an enormous surplus with us means that we're not paying. Again, the goal of your exports is to import. Exporting is a means to an ends. The ends is paying for your imports. That's how comparative advantage works. But they haven't been getting value for what they've been giving us. That's the point I've been making for 20 years, that China's been subsidizing the U.S. economy. That's one of the reasons we've gotten away with what we've gotten away with for so long. It's all this stuff coming in from China and some other countries. It's not just China, but China's been shouldering the lion's share of the burden. And I think now they might recognize this, because Larry Kudlow was saying, China needs us. And look, their whole economy is falling apart without us. To the extent that that's true, that's just a kick in the ass to China to say, hey, look, you need to wean yourself off of this problem right now. Bite the bullet, suck it up, go through the transitionary pain and move on, right? Cut ties with the United States, at least, to the subsidy, to the extent that we can afford to pay for some of their imports. Okay. But don't subsidize trade surpluses with the United States anymore. Let your economy evolve so that you're satisfying the demand of your own citizens. Use all your factories, use all your industrial might to increase the standard of living of your own people, not the American people, the Chinese. And trade more with countries that can provide your citizens with the things that they want. Don't trade with a country that requires you to just buy their bonds in exchange for your stuff, or buy their mortgage-backed securities. So, Trump inadvertently may have done what China should have done on its own. And what Trump is really doing is helping to make China great again. Because, China was great a long time before America ever was great. I mean, China was great for centuries. And I think they're going to be great again. I mean, I think for all this negative talk about China, China's a disaster, China's falling apart, China is where you want to invest money. China is a great opportunity. Unfortunately, probably a lot of Americans can't invest in China. But I think the return on Chinese investments are going to dwarf the return on U.S. investments. I hear all these people too, and Kudlow again on today, and everybody keeps saying, China is our enemy. China is our enemy, right? They're our biggest enemy. Oh yeah, they're our biggest enemy. They're our biggest supplier of consumer manufactured goods and our biggest creditor, our biggest lender. So does that sound like an enemy? Does an enemy give you all the stuff that you need and then loan you the money to buy it? I mean, how is that the action of an enemy? I mean, look, they've been bombing us, right? Those bastards, right? The Chinese have been bombing us with consumer electronics and furniture and appliances and beauty care products and pharmaceuticals and, office products and stationery and sporting goods and toys and you name it. They've been dropping these bombs of consumer goods, like carpet bombing the whole country with all this stuff, right? Right. That's our enemy. No, they haven't been our enemy. We're our enemy. America's number one enemy economically and politically is not Beijing. It's Washington, D.C. And even now, even with Donald Trump there, and I'm going to get into an interview that Donald Trump had on Meet the Press, but before I get into the Trump interview, I wanted to, finish my thoughts on China. But China has been one of the main reasons that we have not had to suffer the consequences of our profligacy. They have provided the subsidy. They have taken the bullet for us. They've absorbed our inflation. They've produced what we don't. They've loaned what we don't save, right? So we've been relying on China. But, China has been reluctant to cut ties. Well, we've cut them. And so I think that maybe the Chinese recognize, what, now or never, right? There's no sense in trying to repair this relationship because we recognize how vulnerable we are now. We can't, be beholden to this relationship with the U.S. The sooner that we can move past this and get rid of these trade surpluses, the better. And the way to get rid of the trade surpluses to stop selling stuff to America and sell it to somebody else or consume it yourself. And that means allowing their own currency to rise, allowing their own interest rates to rise. China can afford to suck it up and take the pain to get the long-term gain. The amount of pain that we're going to have to suffer is much worse. And unfortunately, I don't know that we're going to get the gain because I don't know that we're going to pursue the right economic policies. One of the things, too, that China should think about, I was watching on CNBC today, and Jeff Gundlach was interviewed, and he mentioned, and I hadn't heard this, but I assume that, he's not making it up. And he said that in a conversation at one of these events that he was at, Scott Bessent publicly discussed that what the U.S. might have to do is extend the maturities and lower the coupons on U.S. treasuries held by foreigners. Now, that is tantamount to default, right? And I've said that I think we should do this, but not just to foreigners. I think as part of a massive austerity program where we cut Social Security and Medicare, I think we need to have some kind of default on our treasuries. But that's not what they're talking about. But the Treasury Secretary openly said, we need to do that. Now, what does that entail? That means if you're in China or anywhere else and you bought a one-year treasury, right, where you thought you'd get your money back in a year and you're getting 4%, the U.S. government can say, excuse me, but that one-year T-bill that you bought, we're extending the maturity to 30 years or 50 years or 100 years. Who the hell knows? So instead of getting your money back, in 3 months, like you thought, right? Because you bought it 9 months ago. Instead of getting your money back in 3 months, we're going to pay you in 30 years or 100 years, right? Oh, and by the way, I know you bought it with a 4% coupon. We're lowering the coupon to 1%. So we're just going to give you 1% for the next 30 years, right? That's a default, right? What would that bond be worth, right? If you wanted to sell that bond, what would you get? 10 cents on the dollar, 20 cents? I don't know. But it's basically a default. So that is the risk. And I've been saying this all along, that foreigners, by accumulating such a massive amount of U.S. debt that we can't repay, are taking a tremendous risk of default, not just of inflation, because the Chinese can't vote in our elections. So you don't lose any votes by defaulting on the Chinese government's treasuries. In fact, once we succeed in convincing the public that China is our enemy, well, why are we going to pay them anything? Hey, they're our enemy. Why should we pay them any of the money they loaned us? Screw them, right? The risks are high. China's got to know that, right? The way we talk about them, right? Our biggest lender and our biggest supplier. And we're saying they're our enemy. They're our greatest enemy. I mean, if I was China, I was like, screw them. Right? I don't want any of these dollars. I want to get rid of all of them, all my treasuries, all my mortgage-backed securities before they default on me. I want to sell them while I can and buy gold rather than wait for the Americans to default on this debt. I mean, we have, I think, burned this bridge with China, beyond rebuilding. And nobody seems to get that in the United States. People don't realize how vulnerable we are in relation to China and how much better off China is without us and how much worse off we are without China. Anyway, a couple more things that Buffett said, because Buffett was testifying in front of Congress. And one of the things he said in front of Congress was, we'll never default on our debt, after he was overheard saying that we would default, because maybe he doesn't regard extending the maturity and lowering the coupon as a default, but it absolutely is a default, right? That there's no other way to describe it. And so, he's speaking on both sides of his mouth. But, when he's lost for words is when he's asked a simple question. And I was watching this and I almost couldn't believe what I was watching. I mean, it was almost like Joe Biden was asked a question and he, trying to figure out how to answer it. But a congressman, I forget his name, asked Scott Bessent a very simple question. Who pays tariffs? That's the question. Who pays tariffs? Now, the answer is actually very simple, right? Tariffs are paid by an importer, and then the importer passes the cost on to the customer in the price, right? So a tariff is an indirect tax that consumers pay when they buy products. It's indirect because the consumer doesn't send the money directly to the government. The importer sends the money to the government and then collects it from the consumer. That's what it is. It's a very simple tax, right? The founding fathers understood it. They put it in the Constitution. They didn't have to explain what it was. Everybody has always known, even before we had public schools or, when people didn't even graduate high school. The average Americans, everybody knew what a tariff was and who paid the tariff, right? Very simple. Again, about the economic test, right? They give out these economic tests. If you want to be an economic advisor to the president, you want to be Secretary of the Treasury, they give you a test on economics, and only if you fail, are you qualified for the job, right? Now again, I think Scott Bessent is actually a smart guy. I think he knows exactly who pays these tariffs. That's why he couldn't answer the question, because he couldn't think of a plausible lie. He was kind of stuck, right? Now, you think he would have rehearsed this one because he's got to know somebody's going to ask this question, right? So you would have thought that he would have had a few lies just, ready to go, right? But he's asked the question, who pays tariffs? And then the look on his face, he's just stammering, like, he's repeating himself. He's got a blank look. I mean, you got to watch it. I put this, I was so taken aback by the shock. This guy is our Secretary of the Treasury, and he's acting like a blubbering idiot, right? Like he really can't answer this question. And then he finally says, well, it's a complicated question. It's not complicated at all. And look, he knows the answer. He just doesn't want to say it. That's why. I mean, he can answer the question. He can't possibly be that dumb, right? I mean, he's a very successful guy. And so it's obvious that the reason he's sitting there with a blank look on his face, stammering and stuttering and repeating himself to the point where the congressman is so disgusted that he can't get an answer that he just moves on and reclaims his time. But I mean, you got to watch it I put it on my X because I can't even do it justice. How ridiculous. I mean, it's embarrassing because again, either he's that dumb, right? Which I don't believe, but that's how he looks. And he's our Secretary of the Treasury. I mean, just looking at that, you'd want to dump your treasuries, right? If you owned them. But what's more likely is that he was just trying to come up with a completely BS explanation on the fly. And he wasn't able to think of one because he knows how ridiculous it is. Now, why didn't Scott Bessent want to answer that question? Because if he answered the question, he would contradict his boss. He would have to say that the consumer pays the tariffs. The congressman knew the answer. That's why he asked the question. And Bessent knew the answer. That's why he didn't answer the question. Because Trump's been telling everybody, foreigners pay the tariffs. It's external revenue, right? That's BS. And I've been saying that all along. And Scott Bessent knows it's BS. That's why he couldn't come up with an answer to a very simple question. Anyway, let me move on from Scott Bessent's ridiculous comments to President Trump's. Because he was interviewed on Meet the Press for the 100 days of his administration, where, again, he repeated the lie that it's the most successful 100 days in the history of administrations. And he talked about the economy. He said that soon we're going to have the greatest economy in the history of the world. And we're on the verge of the greatest economic boom in the history of the world. Now, both of those statements are false. If anything, we're on the verge of the greatest economic bust in the history of America. I don't know about the world, but certainly in the history of America, we are going to have a huge bust. And in fact, the only way that we could have the biggest boom in history is if we endured the biggest bust first. Because in order to have a real boom, we got to reset this economy. We have to clear out all the malinvestments. We have to let all the bad debts get defaulted on, all the businesses that shouldn't be here. They need to fail. All the resources need to be freed up and reallocated. So we need to go through a cathartic, a collapse. A lot of bad things are going to happen to lay a foundation for a great economic boom. Now, it can happen. It would be worth it. I'd love us to do the right thing, but unfortunately, we're not. There's nobody in Washington that has the courage, maybe not even the knowledge, to do the right thing. And so we're not going to get a boom. We're going to get a massive bust. Now, one of the things that Trump talked about, the woman who was interviewing him said, are you going to make some cuts to Medicare? Are you going to cut something? And he's like, no, absolutely not. We're not cutting anything. He said, we're not going to cut Medicare. We're not going to cut Social Security. We're not going to cut Medicaid. No, they're not. Not only are they not cutting it, all that stuff is increasing. Government spending is increasing. Donald Trump is going to break his own record as the biggest deficit spender, although actually Biden already broke Trump's record. So Trump is going to break Biden's record and be the biggest deficit spender in presidential history. And he'll probably have bigger deficits in his term, his 4 years, than all 8 years of Obama, because Biden set the record for the biggest increase in the national debt in one term. But Obama still has the record for the biggest increase in the national debt for one president, because Obama was president for 2 terms. Now, Trump is going to break Obama's record, because at the end of Trump's second term, when you add the deficits from his first 4 years and his last 4 years, those 8 years will be a much bigger increase in the national debt than Obama. So he'll break that record. But I think that Trump will run up more debt during this 4-year term than Obama did during his entire 8 years. That's how bad the deficit spending is going to be. And that's basically what Trump admitted during this interview. Because after he said, we're not going to cut Medicare, we're not going to cut Medicaid, we're not going to cut Social Security, so we're not going to cut anything. All we're going to cut is waste, fraud, and abuse, because nobody minds that. See, that's the problem. In order to be a good president and make America great, Trump has to be willing to cut stuff where people mind, right? if you're only going to cut things where nobody minds, you're not going to cut anything because there's always going to be somebody that minds. And in fact, waste, fraud, and abuse, that actually minds too. Now, when you just talk about cutting waste, fraud, and abuse, yeah, everybody is for that. Until you identify, here's the wasteful program that we want to cut, right? Because every wasteful program that's in the budget is there for a reason. It's not there by accident. It just didn't magically appear. Somebody put it there. And it was put there for a reason because it benefits somebody, right? And the minute that somebody is identified, all of a sudden, somebody minds. And the person whose wasteful program is about to get cut is on the phone with his congressman saying, you cut this, and I'm cutting off my donations to your campaign. In fact, I'm going to find somebody who's going to run against you, and I'm going to donate to him, right? That's what happens. So you can talk about cutting waste, fraud, and abuse in the abstract. But the minute you identify the abuse or the fraud, now you've ruffled feathers. Now you've got people say, oh, no, don't cut that. Oh, I need that. That's why this whole Doge, I said this from the beginning. Yeah, they're making some cuts, but they amount to nothing. Every president we've ever had has been in favor of cutting waste, fraud, and abuse. There's never been a president who hasn't said yes. I mean, if you asked a candidate or a president, excuse me, sir, would you be in favor of cutting waste, fraud, and abuse? Sure. I mean, who's going to say no? Yes, I'm in favor of fraud. I want more fraud. Or we want more waste. I'm in favor of the government wasting money. Nobody is going to say that. Yeah, no one's going to say, oh, I want to cut Social Security. I want to cut Medicare. I want to cut defense. But sure, I'll cut waste. I'll cut fraud, right? So what Trump is promising to do is not new. This is not revolutionary. This is what everybody has promised. But the problem is nobody delivers. Now, maybe Trump will cut a little more waste, fraud, and abuse than his predecessors, but it's not going to matter because what we need to cut is the stuff that he won't touch because he knows somebody is going to mind. And in fact, not only is he not cutting what needs to be cut, he's increasing or cutting taxes, which we can't afford to cut if we're not going to cut spending. And the taxes he wants to cut are highly inflationary. He wants to cut overtime, tax on tips, on Social Security. These are not growth-oriented cuts. These are Keynesian, pump-priming, stimulus, inflation-inducing cuts, right? That's what Trump is supporting. Now, another ridiculous thing that Trump said, because he was asked if he was going to provide some kind of tariff relief for small businesses, right? And Trump said, no, because they're not going to need any relief. He said that small businesses are going to be making so much money because they're going to be building their products in America. So they're not going to need any relief. They're going to get rich making stuff in America. No, they're not. The reason they're not making stuff in America right now is because they can't afford it. If they made the stuff in America, it would be so expensive, their customers couldn't afford it. So the reason these small businesses are in business is because they're able to manufacture stuff in China. Now, when they can't do that anymore because of the 145% tariff, they are out of business. But it shows you how out of touch Donald Trump is when he doesn't even realize how many businesses are going to go out of business because he's cut off all their supply. And he's saying, oh, they're going to be rich. They're just going to make the stuff here. No, they're not. How are they going to do that? With what factories? With what supply chains? With what workers? This is all a pipe dream. I don't know who is blowing all this smoke, up the president's butt, but this is ridiculous. But it seems like he actually believes this. I mean, watching his expression. So he is in for a huge surprise when we get a string of bankruptcies of small businesses from these tariffs. You know, the other thing he said too is he talked about how under Biden, Biden was the worst president in the history of the world, right? When Biden was president, it was the worst economy in the history of the country. and he was the worst president ever. He's the best president ever, and we've got the greatest economy ever, right? It's extremes, right? There's no in-betweens with Trump. But Trump was saying that under Biden, we were losing $5 billion a day, and that was terrible. We were losing $5 billion a day on trade, and I stopped that. We're not losing any more money on trade. This is what he said. But yesterday, we got the March trade deficit that came out, and it was the biggest trade deficit in history. And in fact, the trade deficit has gone up 4 out of the last 5 months, pretty much all on Trump's watch. We have one record high trade deficit after another. Now, Trump said that we were losing $5 billion a day on trade under Trump. Well, we got to be under Biden. Well, we're losing more now because we have bigger trade deficits now than we did when Biden was president. So if we were losing money on trade under Biden, we're losing even more money on trade under Trump. So how can he claim that he's solved the problem that has gotten worse since he's come to office? Now, maybe Trump was saying, well, we're not losing as much on trade now because we're collecting the tariffs. And that's true. But the government is collecting the tariffs from the American public. So it's not a net gain, right? It's just money that's going out of the public's pocket into the government's pocket. Now, is that a win? I mean, for most Americans, that's a loss, right? Now, maybe what Trump is saying is the U.S. government is making money on trade now because we're collecting tariffs, but the public is losing more because now they're paying the tariffs. It's not a net gain. We took money out of one pocket and put it in the other. But the way Trump talks about it, it's like the whole society was losing. Well, if the losses are a function of the size of the trade deficits, we're losing more now with Trump as president than we were with Biden was president. And of course, we were losing when Trump was president the first time. He forgets about the record trade deficits that he presided over, right, during his first term. And now he's broken those records during his second. Now, yes, I know a lot of that was front running his tariffs. So maybe now that the tariffs are in, our trade deficits are going to come down. But they're going to come down not because we're making more stuff ourselves. They're going to come down because the stuff that we're importing is too expensive and we're not going to be importing it anymore. So, the savings rate is not going to go up. When Trump said, we're going to produce ourselves. No, we're not. Where are we going to get the money? How are we going to finance it? We need an increase in savings. We're not going to get that. We're going to get a reduction in spending, but not aggregate spending. See, the savings rate is not going to go up. Americans are still going to spend everything they earn. That's the problem because rates are too low to encourage savings. So spending is not going to go down, but consumption is going to go down. That's because we're going to buy a lot less for the same amount of money. Like when Donald Trump was talking about the dolls, he said, instead of buying $30, we'll buy $2, right? Americans are going to spend the same amount of money on dolls. It's just that they're only going to get 2 instead of 30. So they're not increasing their savings. They're not, hey, let's buy $2 instead of 30, and we'll take the money that we saved from not buying all those dolls and we'll put it in the bank, right? And now that money can be loaned out to an entrepreneur who's trying to build a factory. No, Americans aren't going to save anything. They're just going to spend what they used to spend to buy $30. They're going to take the same amount of money and spend it on just $2, right? So there's nothing left over. So this is just going to be one big disaster. Probably the most ridiculous thing, though, that the president said this week wasn't even during that interview. It was on a post on Truth Social. Out of the blue, Trump posts, I'm going to impose 100% tariff on movies filmed outside the United States. 100% tariff, right? First of all, the movie industry, Hollywood motion pictures, that's one of our industries that we have a trade surplus. We export a lot more movies than we import. So movies, the motion picture industry, Hollywood entertainment, that is not a problem that Donald Trump needs to fix. Leave well enough alone. But apparently it bothers Trump that some American companies do some of their filming in Canada, right? Or in Europe, or, in Puerto Rico, or I guess, Puerto Rico is America, so maybe he doesn't care about that. But there is a lot of on-location filming. Sometimes, we make a movie that's supposed to take place in Europe. We don't have like a big sound stage like we used to, when we had the big movie studios. The unions and the government destroyed that system, which was a great system, and don't have really time to get into that in this podcast. But, so they go off and they film on location, right, to make it look real. But now Trump somehow wants to put a tariff on that. I mean, how do you even do that? Because these are intangibles. Tariffs are taxes that you collect at the border from the importer. Something comes in on a ship, you look at it, you count it up, and you slap on the tariff. I mean, the only way you can have a tariff on movies is if we're importing DVDs, right, coming in from China or something. Then you can tariff them at the port. But how do you tariff the movie? You can't even do it. I mean, Trump doesn't even understand. He says that tariffs are his favorite word in the English language. Yeah, it's his favorite word because he doesn't even know what it means. He doesn't understand it. You can't put a tariff on that. I mean, you could try to put some kind of federal excise tax on movies, at the theatrical level, like movie theaters. You could say, hey, you got to pay this federal tax if you're going to show a movie that was a foreign film. You got to charge everybody double, right? So if it's $20 for the movie and you want to screen a foreign movie, well, it's $40. You're going to collect a $20 federal tax from the moviegoer. I mean, who the hell's going to see the foreign movie if you have to double the price? I mean, I don't even see those movies anyway, because they normally have subtitles. And I'm not big on having to read movies. I just like to be totally entertained. Reading is too much work for me in a movie. I find I have a hard time keeping track of what's going on if I've got to read. So I just want to just sit back and listen. So there's no way I would pay double to see a subtitled foreign movie. But the tax would even be on an American film that was produced in America, but maybe half of it was shot on location. So what would they? So if the movie ticket was $15, they would say, well, $7 of it is foreign, so we'll put a $7 tax, and now the ticket is $22. But that wouldn't be a tariff. It would just be a federal excise tax, like a sales tax on movies. But there's no way. I mean, I don't know. The president must have woke up and got this crazy idea that he's going to tariff movies. Like he could just tariff whatever he wants, right? That's just his weapon. Tariff, 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 tariff. And I'm going to make America great again with these tariffs. But, of course, some of the movie stocks, although Disney had a great day today, I think it was up 9-10% on earnings. But when it came out, I think Netflix and all these movies, they went down because now they're trying to, they're worried about what the hell is Trump going to do here, trying to screw up our business by putting some kind of weird tax on. But all of this is probably why, Warren Buffett, the Oracle of Omaha, right? The greatest investor of us all. They had the Berkshire Hathaway shareholder meeting over the weekend, and Warren Buffett announced his retirement. He's 94 years old. And he's retiring at the end of the year. He's stepping down as CEO of Berkshire. But one of the things that he said was that conditions could easily develop that, or conditions could develop that could easily make us, meaning Berkshire, want to own a lot of foreign currencies. Now, what conditions do you think Warren Buffett is referring to that would make Berkshire want to own a lot of foreign currencies? The conditions that are developing right now. I don't think that Warren Buffett was speaking about some hypothetical future situation. I think Warren Buffett and the team that he's going to leave behind at Berkshire Hathaway already know that those conditions exist. That's why they have such a large cash position. I think for political reasons, they've held that cash in dollars rather than foreign currencies. And how I think Berkshire Hathaway is going to go about owning a lot of foreign currencies is by buying a lot of foreign stocks. And so I think the acquisitions that Berkshire Hathaway is now eyeing for that cash hoard are overseas. He's going to be building out a portfolio that's going to look a lot more like the Euro-Pacific capital portfolios. He's going to have a lot more dividend-paying foreign stocks to get exposure to foreign currencies and to reduce his exposure to the US dollar. Mr. Patriotic, never bet against America, is telling you right now that he's going to be placing some bets against America because he can read the writing on the wall too. He is a very smart man. And he's been warning about this for a long time too. He wrote an article a long time ago where he called the dollar squander bucks and the United States squanderville. So he understands, and he understands inflation is a tax. He said it, and he knows that Berkshire is going to pay that tax unless it divests of dollars, and that's what they're going to do. So before Warren Buffett goes on this international buying spree, I would recommend that people listening to me do the same thing. Remember, go to the Europac website, europac.com. Check out our dividend payer. I think my dividend payers fund now is up 23.5% on the year. So if your stock portfolio isn't up 23.5% this year, in fact, if it's in U.S. stocks, it's probably down on the year. You might want to take a look at what's going on in our fund. How are we making so much money just owning dividend-paying foreign stocks? We're the number one fund in our category, Morningstar year to date. So you could check it out at Europac.com. You go to Morningstar, look at it. But my international dividend payer fund, my international value fund, the sleeper fund on the year is the emerging market fund. I think it's only up 5 or 6%. But I think the emerging markets ultimately have the most to gain from the dollar's demise. They've been sharing the lion's share of the burden. In fact, our emerging market fund is overweight China. And for the reasons that I've spoke, there's a lot of pessimism on China, and that means there's a lot of value in China. You always want to invest where there's pessimism. If you're just investing where there's optimism, you're going to overpay. The best chance you have of getting a good deal is, going where people are afraid to venture, going where people are saying everything is bad, because then what can happen? Stuff can be good, right? If everything is priced for perfection, if everybody already thinks everything is great, well, then the only thing that can happen is it's not as great as people think. So China is very fertile ground, and we're overweighted. So if you have a hard time figuring out, what Chinese companies to buy, solution is just buy my emerging market fund, and you'll get exposure to China, and you'll get exposure to other markets. The gold stocks continue to be ridiculously cheap. The earnings came out earlier this week. Kinross beat earnings quite a bit, actually rose for a change. Barrick Gold also beat earnings today. Initially, the stock was down, but it ended up positive on the day. That stock is ridiculously cheap. The one that missed was IM Gold, and it was down about 5%. But, it's not going to miss for the year. A lot of times gold, right? Gold mining is a risky business. Sometimes something happens and you can't quite produce as much as you thought because there was a problem at a mine. I never care. I don't care if a gold company wasn't able to pull some gold out of the ground in a particular quarter because of some delay, because all that means is the gold is still there. They're still going to sell it. They'll just sell it later. They don't lose it. It's not going to go bad. It's still in the ground. And in fact, the longer they wait to pull it out, the more money they're going to get. So the fact that they produced a little less during the quarter just means they're going to produce more in a later quarter, and they're going to get even more money for the gold because the gold is going to be higher in price. So look, these gold stocks are still ridiculously cheap. Even though they're up quite a bit on the year, they're not up nearly as much as they should. And they were ridiculously cheap when the year started because they never should have sold off in the fourth quarter of last year. So you still got a great buy on the Euro-Pacific Gold Fund, EPGIX. I now know the symbol. People were always making fun of me. I kept getting the symbol wrong on the podcast. EPGIX is the no load. And all of my funds have a no load version. The value fund, the dividend payer fund, the emerging market fund, my foreign bond fund, all those funds can be bought at any discount broker, no load. And if you want to get the physical, look, Schiff Gold, I prefer silver right now. I mean, silver still can't move. And in fact, I think Goldman Sachs just did a report and they said, don't expect silver to go up because the central banks aren't buying it. They're only buying gold. That's probably a great buy signal when you get a big bank like Goldman Sachs telling you not to buy silver. It's probably because they want to buy it themselves and they don't want competition. So I do think any day, it's the proverbial coiled spring. At some point, silver is just going to explode. So you can go to Schiff Gold and buy yourself some silver. I think silver's got the same type of upside potential, actually, as the gold mining stocks. Now, the silver mining stocks, that might even be one better than the gold mining stocks, because they're really depressed because of how depressed silver has been. But it's not going to be depressed for long. Anyway, again, you like this podcast, make sure and give it the thumbs up. Leave me a comment. I do respond to some of those. And again, we're putting out some excellent content at Schiff Sovereign. Make sure and sign up. Make sure you're getting that free newsletter in your inbox several times a week. And we're coming up with some more interesting premium products. So be on the lookout for those at Schiff Sovereign. Anyway, that's it for today's podcast. Enjoy the rest of the week. Bye for now.